For a little bit more on this, what's going on with the Wall Street and the GameStop, we have, of course, pleased to bring on the one and only editor of the Madison Business Review, Mr. James Faris. James, thank you for being here with us today.
Colby, thank you so much for having me on. I'm really glad to be here.
Of course. And so, myself, I personally, I'll be honest, don't know a ton about the stock market and how it works. So can you just kind of, for me and other people who are maybe very confused by what was happening last week when this was all going on, what in layman's terms went on with GameStop's stock?
Absolutely, Colby. That's a great question. And that's something the Madison Business Review has worked to cover in recent weeks. We have several stories explaining exactly what's happened on our site, including a story that was on the front page of the Breeze's print edition yesterday, which was really exciting. So basically, fund managers on Wall Street, like Andrew Left of Citron Research, predicted that GameStop's stock would fall in value, and they wanted to profit from it. So they did this by borrowing shares and immediately selling them, hoping to buy the shares back later at a lower price. That's called shorting a stock. So for example, if a fund manager thought GameStop was overvalued at $20, he could borrow 1 million shares and sell them on the stock market. He'd instantly make $20, but he still has to return the shares he borrowed. If the stock fell, for example, to $5 per share, he could close his short position by buying the 1 million shares back at $5 a piece for $5 million and then returning them, keeping roughly $15 million. But if the shorted shares rise instead of fall, the fund manager is in big trouble. So, for example, if it rises to $30, he's now looking at least a $10 million loss because it would take $30 million to buy back the 1 million shares he borrowed and sold for $20 million. But the shares go to $60, $80, $140, $250, $480, exactly like GameStop's did. The fund manager is looking at a decision that possibly ruined his career, costing him tens or hundreds of millions of dollars. And so to prevent a mistake like this, the fund manager has to buy back his shares at a loss to prevent bigger losses and stop the bleeding. And this gives buyers more and more confidence. Those Redditors on Wall Street Bets, it gives them more confidence to keep buying. And more short sellers in return have to sell and close out their bets. That's exactly what sent GameStop's stock price to the moon, as they say. But the fun ends when there's no more interested buyers. What happens then is that the stock's trajectory, it's really like a roller coaster. It takes off at the beginning like a rocket, and you think it's never going to stop. But then it slows like a roller coaster getting to the top of a hill, and then it quickly plummets just as quickly and just as fast as it rose. And that's, in short, pun intended, exactly what happened.
Okay, yeah, that definitely helps me visualize it a little bit more. So what has been the aftermath of this, and how is this, do you think, going to change the way that people on the stock market invest?
Yeah, it's a great question, and I am really happy, for one, to see that a new generation of investors like myself have discovered the stock market. There's few better ways to grow wealth, especially at a young age, but it can be very dangerous if young investors believe the lie on message boards and from YouTubers that stocks only go up. It's not true, of course, and investing turns into gambling when greed turns into euphoria in a belief that stocks will never fall. I wrote about that earlier this week. The broader market saw this crazy speculation and moved inversely to GameStop. So as GameStop took off, the market fell, and now as GameStop has fallen back to earth, the market has rebounded. So in summary, it's usually best to invest in more boring stocks like Apple, and you might not make $56,000 in 2 days like one JMU student we covered did, but you'll likely avoid major losses as well. Finally, my advice is always to read the Madison Business Review using the Business tab on the Breeze's website.